Hello and welcome to our weekly look ahead at the markets. And we have a fair few data releases coming up this week, not least of which is the US core PCE index. That's the Fed's preferred gauge of inflation. That's been a little bit sticky, of course, sticking around that sort of 3-7% level. So looking to see if there's any further disinflation, or whether we're starting to hold at these sort of levels, if inflation's starting to sort of rest on this sort of level between sort of 3 and 4%, and that's going to be important for the Fed in terms of how long it stays restrictive going forward, and therefore market expectations around when the first Fed rate cut happens. Also on the same day on Thursday, Eurozone CPI, now that had come down to 2.9%, so looking pretty good for the ECB, and again we'll be looking to see just what sort of level comes out there, and that will have important implications for expectations around the ECB as well, of course. And then also on Thursday, the big one that we're looking at is OPEC. Now OPEC delayed its meeting. It was due to take place on November 26th. It's now going to take place online on November 30th. There has been some wrangling over some African nations' baseline quotas, particularly Nigeria and Angola. That has caused some a bit of a deadlock about what sort of cuts and quotas and so on, what sort of agreement might happen. But it underlines the fact that OPEC's in a bit of a tricky position right now. Prices have come off quite sharply since the Saudi lollipop, that 1 million barrels per day of extra cuts that it announced. It started in July, and it's scheduled through to the end of this year. Now that's likely to continue as the Saudis seek to place a bit of a floor under the market. We've seen prices come down last week, a big reversal, a spike lower with the news of the delay to the meeting. Markets worried that maybe there could be an unraveling of the deal, or that they wouldn't be in a position to strike a deal for next year. So we think that probably there's going to be some extension of the Saudi lollipop, that extra 1 million barrels per day. Whether or not they can deepen it, they're currently pumping around 9 million barrels per day. They could maybe go to 8.5. That would be pushing the limits really of what they can do on the underside. And they'll be looking to take some, or lots of other members with them. They'll be looking for other members to chip in. But the problem that OPEC faces is that even if it does agree to further reductions in its own output, it's battling rising output elsewhere. So the outcome of the deal maybe matters less for the overall oil market than maybe for internal OPEC politics and dynamics. And that's maybe why we're seeing a bit more wrangling, and maybe the Saudis are prepared to see that wrangling play out, because they know that ultimately rising output from Guyana, Brazil and the US pumped 13.2 million barrels per day in October, a record high. That rising output from non-OPEC countries is offsetting what OPEC can do. It's also got higher Russian exports, Iraq doing more, Iran has been pumping more, exporting more, and the UAE is looking to sell more of its Murban light crude next year. So there's lots going on, and really all the dynamics and the supply dynamics are pointing to surplus next year. And the International Energy Agency said that it thinks that there will be a surplus next year, even if Saudi Arabia extends its additional cuts. On the other side of the equation, demand side, they're also looking at potentially slowing growth, recession next year potentially, and that's weighing on market sentiment as well. So twofold problems facing OPEC this week. It needs to square away this Nigerian and Angolan baseline quota story before it can move on to agreeing to cuts. But I think the bar for disappointment is quite low, and I think we're going to be looking at OPEC admitting that output and pricing is probably going to be a little bit lower for longer going forward. That's it for now. Thanks for watching.